The government, you are aware, in the last budget, insofar as the personal income tax is concerned, had provided a major relief. This relief was primarily arising because of the government's belief that they need to make taxation simple for the common man. And so that is why all the changes were made in the new tax regime, where we do not have, any exemptions or deductions. But of course, the standard deduction was included. Right. For the new tax regime. The number of tax rates were reduced. The effective taxation was reduced. And then for the non-government salaried class, gratuity exemption limit was also increased. So after having done this rationalization, when not even an year has elapsed, right, and without seeing, its impact, it would have been really premature for the government to have again changed the rates. Right. Similarly, on the corporate tax side, also you are aware that way back in 2019 itself, right, the tax rate was reduced, again in the direction of simplification, without exemptions and deductions. The tax rate was reduced to 22%. In order to have some stability in taxation, in tax rates, it was felt appropriate that we do not change the rates too often.
Okay. In addition to that, there was also some expectation that was coming from the industry, that is with regard to providing extension when it comes to lower tax rate of 15%, especially for the manufacturing unit, the provision which was announced in the year 2019. But that again, the government has not decided to provide an extension going forward, especially especially considering the fact that companies are, especially global companies, are looking for next destination when it comes to setting up their manufacturing unit after what we are seeing in China. So don't you think that, sir, that this time government should have taken such decision and provided another extension to the manufacturing companies?
Three things. Firstly, industries, especially large industries, take a long time for investments to actually fructify on the ground, from the conceptualization stage to planning, financial closure, and then, operationalization of their investments is a long drawn-out process. And so that's why, keeping this in mind, way back in 2019, a 4-year window, later on extended because of COVID by another year, was provided for industries. So I feel sufficient time was given at that point of time for industries, enterprises to invest. Secondly, the tax rates, effective tax rates now today, as I mentioned, in 2019, they were reduced to 22%. Right. So they are already, at very reasonable levels when you compare economies of the size of India. Thirdly, I would like to emphasize that for investments, taxation is but one factor. And there are other important factors for the whole ecosystem to be able to attract investments, and our country has done remarkably well on those fronts. So whether it is ease of doing business, whether it is our rankings improved in the World Bank, and they continue to improve with government's emphasis on trying to improve doing business, setting up businesses and doing businesses in India, with our emphasis on manufacturing through the PLI scheme, through the PMP scheme. So all these are measures which have actually improved the whole ecosystem for investments, and I am pretty confident there are incipient signs of improvement in private capex, and hopefully times to come, in the years to come, we'll see good investment in our country.